Is the housing market going up or is the housing market going down? Well, that really depends on where you live and who you're listening to. Let me explain. First, let's look at this article that recently came out, actually of March 28th, from Wolf Street. The most splendid housing bubbles in America, March update. Biggest monthly price drops now in Las Vegas, San Francisco, Seattle, Phoenix, Dallas, and Denver. Now, we've been talking about how certain states have been hit the hardest by this rise in interest rates and lack of demand. But I want to point out that this is a March update and that these price drops are now, right? But when you look at where they're getting this information from, you'll see that this is from the S&P CoreLogic Case-Shiller Home Price Index, or HPI, for January, which is a 3-month moving average of home sales that were entered into public records in November, December, and January, reflecting deals made largely in October through December. Now, come on, guys. That was a different market. We're talking 6 months ago. We were talking when going into the winter, we're talking about when interest rates were going up at that time versus coming down. Very different market. So to say that this is now and that this is a March update is very misleading, because this is actually a history lesson at this point. Now let's move on to another article that recently came out from Yahoo Finance. Housing market correction is losing steam, where 7 revised forecast models see U.S. home prices going from here. So both these articles came out within a few days of each other, and yet they both tell a very different story just from their headlines. But what's really important to know here is that the market is ever changing, and so these forecasters constantly have to revise what they put out at any given time, because they are always looking at historical data. They're not looking at what's happening currently and not what's projected to happen based on supply, demand, and absorption rate. These are very important factors when getting information about the current market. But what's even more important is not national numbers. The most important thing to look at is local data. As you can see by this map from Fortune, crunching all the numbers would give you one data point that would not be directly reflective of any one location. So for instance, California is showing that it lost $0 to $10,000 in 2022, Idaho over $20,000, but yet Florida over $20,000, or as they say in the headline, a homeowner in Florida gained $49,000 in equity in 2022. So these areas, these regions are all doing different stuff. And I would argue that it's all the way down to the very local level of looking at information. So instead of just Tennessee, you want to know Knoxville. And in Knoxville, you want to know your geographic area of Knoxville or Maryville or wherever you live. There may be an area of town that has more homes coming on the market, and there may be an area of town that you live in that has less or higher demand for that market. Very different things to know. So it's very important to get that information as accurately as possible so that you can make informed decisions. Now, this is a report that comes straight from the Multiple Listing Service. It's a market summary for March of 2023. And I just want to show you a few quick data points that I think are very telling of the trend we have. Number one is the number of listings. As you can see from this curve, active listings rose last year during that time when interest rates were going up. Then as we went towards the end of the year and the beginning of this year, inventory has actually come down. At the same time, this green line represents pending or new listings. New listings were coming up. So if new listings are going up and active listings are going down, that means people are buying homes. Otherwise, it would be different. Absorption rate. This is a simplistic way of looking at the market by saying, hey, in the last month, we had this many homes on the market and this many homes sold. Based on that, this month at the same rate, how many months would it take for us to run out of inventory if nothing else came on the market? We use this as a gauge to determine where we are in a seller's market, a balanced market, or a buyer's market. Typically, it ranges between 1 month to Well, 0 to 5 months would be a seller's market, and anything over that 5 to 6 marks would be a buyer's market. As you can see, we never at any point got above 2.5 months of inventory in our area. This is very telling, and you can see the trend kind of going down deeper into what's called a seller's market. Other stuff to look at here, like days in market, maxed out at 50 in February. Again, very common. Days on market has been relatively short given our historical averages. So these are the type of factors you want to be looking at so you can see a local trend. You want to know what's going on here and how that impacts your either home buying decisions or your home selling decisions. I'm Eric Weiner with the Knox Real Estate Group. I hope you found this information to be valuable and helpful. If you would like to know or have any other questions specifically about our market, please just respond back to this email or comment down below. I would love to get that conversation going or to put out more content that's relevant to you. I look forward to hearing from you. Have a great day.